Hi everyone, delonewolf here. Welcome back to EVE Talk, your weekly look at the market in EVE Online. When it comes to news, well, we have the CSM 17 that has been decided. I personally don't really pay too much attention about the CSM. My personal opinion there is that it's really cool, it is very unique, but something like the CSM will always bounce up against a pretty impenetrable wall of business realities that exist for CCP or in gaming in general, whichever way you want to see it, and that, well, their power is limited. I just hope that they can basically be a good soundboard for CCP to avoid making some of the worst mistakes that they can make, for instance on monetization and things like that. But yeah, if we look at the general trend in gaming at the moment, the pressure must be absolutely massive. I do want to congratulate everyone that was selected and or elected, I should say, and that is going to do their best for the CSM. I absolutely do admire you. It's not something that I could see myself do. It's basically taking on a second job, really, and so it shows extreme dedication. So yeah, good luck to everyone on the CSM there. For other news, well, we don't have a lot of development news. We did get a second mass test last week for the DirectX 12 update and the graphical updates in EVE Online, which went a hell of a lot better than the one the week before. So it actually felt manageable. I had full confidence to, even with 180 people on grid, to zoom in, zoom out, to move the camera around, which was really not the case the first time. So that first mass test was actually really helpful because obviously CCP also detected what was happening and they managed to fix a lot of the problems in 1 week. It was still not stellar performance, I would say. Getting to like the 30 FPS whenever 150 people on grid are shooting a structure is still not that great, but this felt at least stable. This felt doable. This felt like it's something that is not just going to crash whenever you do a quick zoom to try and check something out or switch to another window or something like that. So all in all, pretty positive on that, but I think you can already see that from the ticker as well. In general, of course, the vibe for EVE Online is that it's a pretty quiet time. I would say that a lot of people are still or are back in that wait and see mode. We did get FanFest, we did get announcements there, but since then we really haven't heard a lot. And then on top of that, I mentioned it last week as well, I think it's going to start to bite. It's going to be the summer slump that is in all likelihood going to start here in Belgium. For instance, I'm making EVE Talk a little bit earlier because it was going to be 35 degrees Celsius today, so not exactly a game to be inside or to be gaming or something like that. So yeah, we will see, of course, how all of that evolves, but today we're taking a look at the current state of the market. Before that, quick look at the New Eden store, see if there's anything happening here. We do have a sale on the multiple pilot train certificate, 20% off. It's going to be interesting to see if that translates to something on the market. It really should. We've got new skins, the Luminar Rising skins, very orangey, I would say. It's got a little bit of a gold sheen to it, so maybe the metallic parts can be pretty cool, but not exactly my favorite color palette. Then I'd rather see this. Federal Police skins, those are of course really damn cool. And then we get some bundles. Let's take a quick look at the services. So the sale happening on the multiple pilot train certificate, and you can still get the bundle with the Elite XIX skins there. All right, well, let's move on to the market then, and let's take a look at pilot services coming in at 4 minutes. And as always, we will start with Plex. So here we go, the chart for Plex. After reaching a 1-year high point and getting a daily average and a max price of 4 million ISK, or just about 4 million ISK, we do have to give back a little bit of ground, getting that 5-day moving average back below the 3.75 million on the chart. Still, we are above the previous stop, so we're still basically in 1-year high point territory for Plex, selling at the moment for 3.94 million, or 3.84 million, excuse me, in JIDA, and buyers coming in at 3.6 million. Are they a bit more aggressive in the player on trade ups? No, that's really the cutting edge of the competition. And yeah, we go down to 3.8 million. It's 400 So that'll probably be picked up pretty quickly. This is the current state of Plex. As I've said, I think here summer slump is a little bit the danger, and the wait and see approach can be seen here as well. We're not continuing to rise expecting hype or massive inflation or anything like that in the game. I think the market is indeed bracing for any possibility, including even lower activity, and that could also be quite deflationary, and whatever it is that CCP decides to do, of course. Then we will take a look at those multiple pilot train certificates, and you can see, well, the sale is having an impact, but it's not as drastic as the previous one here late January that crashed the price down to less than 1.25 billion. So we get a slow decline. Obviously the maximum prices are now stuck, and it's the minimum prices that are declining pretty quickly. We were above 1.5 billion and we are now still above 1.5 billion for the sellers. Buyers are at 1.4 billion. So what was our absolute high point? 1.64. So maybe we can see this as well as a little bit of a CCP intervention, noting that multiple pallet trade certificates are above 1.5 billion. We were here before once, and then on the second one, a little bit later, we got the sale here. We got to 1 year high point 1.64 billion. We're still above 1.4. CCP comes in with a sale and brings the price down a little bit. I'm not sure, of course. This is a little bit speculation on my part, because obviously we can't read minds, but during, I think it's one of the fan fests or one of the streams during the pandemic, CCP did mention that, yeah, they were going to pull back a little bit from that absolutely no intervention policy to, well, we can do sales from time to time to target certain parts of the economy. I think that could be what's happening here. I think that's also what happened for the daily alpha injectors. We'll keep an eye on all of that, of course, but basically CCP does have a little bit of pricing power now, and it's kind of using that for the train certificates to keep them from becoming just crazily expensive. Then we have the skill extractors that are, well, also cresting, stopping their increase from a 1 year high point with a maximum price that went above 450 million a couple of days ago. So we're going to be down from that down to 429 million for the sellers and 423 for the buyers. What could also be a little bit part of the explanation is the sale on multiple pilot train certificates that does potentially have a little bit of an impact on Plex and on the skill extractor market. But for now, I also think that, again, it's the market that is in more of a wait and see approach. We know that pilot services are expensive because, well, they became expensive in real life. CCP did increase the prices for subscriptions for Plex and things like that, but where are we going from here? That still depends massively on what CCP actually announces and releases for the game, and of course on just general player activity as well. Then for the injectors, we have the large scale injectors that are going to a 1 year high point and have just broken through the 750 million mark. Not what I personally was expecting. I thought that perhaps with the increased Plex prices and the very expensive skill extractor prices, but nothing all too concrete on the horizon, we would get a pause here as well. Really all depends again on what CCP decides to do. And then on top of that, we've got the announcement at FanFest that in all likeliness attributes are going to go away, which should just basically normalize training times for a lot of players. Well, on the one hand, you could say that, yeah, it's going to diminish potentially the importance of skill points in general in the game. On the other hand, it also means that if you want an edge for your skill training, well, it's injector time, and that could increase demand. So that may be a way to look at it, to invest in skill injectors now, despite the fact that we were already at 1 year high prices. The market has pushed this even higher to 780 million practically for the sellers, 733 for the buyers. Also pretty aggressive buying there. Let's see if the small scale injectors can still do their own thing. Well, a little bit, right? You got a little bit of a dip, which did not happen in the large ones. That one just basically stabilized for a little bit. Small scale injectors actually did go down towards 150 million, but we're back at 160. We're again at the 1 year high point as well. That trend is not to be stopped. 160 for the sellers, 145 to almost 146 million for the first buyer. So that's also a pretty narrow margin. And then we've got the daily alpha injector, where again we can sort of see that CCP intervention, which does seem to be a double top reaction at this point, right? You can see that here as well in November. Daily alpha injectors go above 50 million, a second time above 50 million. There's the sale volumes, we go down below 40. Here we go at the start of May, we're above 50 million as well. Then we touch that again here, and then we get the sale that brings us again back down below 40 million, but this time volumes are a little bit lower, and so it's a little bit easier for the market to absorb that, and so we went right back to a 45 range on the chart. It's 45.3 for the sellers, 41 million for the buyers. Again, a pretty narrow margin on this one, but my feeling here is that this is not the absolute free bonkers market that it was before. CCP is watching the pilot services quite closely and is acting sort of like a central bank, willing to intervene when it considered prices to be too high. Then finally we've got the hypercores, where maybe CCP is not gonna do too many interventions. It is really its own little thing with the Hypernet relay, and in my opinion, objectively speaking, the Hypernet relay, it is gambling, but it is gambling at perfect odds. So if there's 10 tickets, then you've got a 10% chance. There is no extra edge for the bank or anything like that. That's just the reality of the Hypernet relay. So it really is a fair system, and it's also pretty niche, of course, at the moment. Very expensive hypercores, very low volumes on this one as well. We're talking 410,000 for the sellers. I think this is an all-time high, 381,000 for the buyers. So hypercores are at the moment kind of still showing inflation, and the others basically become a little bit of a harder metric to use, because of course potentially of that CCP keeping things within the ranges that they want. Next up we have the mineral market coming in at 11.55. There we go. As always, here is titanium that is continuing to slide down and is really trying to defend 3.5 ISK, but is having a harder and harder time for that. Sellers coming in at 362, buyers at 356. Volume wise, at least we get 1 billion units here on the buyer, 2 billion units here, getting close to 350, and the volumes for the sellers are drying up. So I think looking at the volumes here, we get a pretty good chance of defending 3.5 ISK, but it is getting closer and closer, and so I think the lower activity is not conducive to higher prices, and thus high-sec miners, in my opinion, are probably suffering a little bit. I don't think this trend will be bucked by pyrite. It'll probably be back under pressure. It's barely visible, but you can see the 5-day moving average pulling below the 20-day moving average, and we're seeing a little bit of pressure on this one as well. 859 for the first seller, 881 for most, and an 854. So again, an 8.5 is trying to be defended, but the pressure is obviously back on for these two. And then we get Mexalon, which cannot buck the trend. It's a little bit slower, a little bit more stable, but clearly we are also seeing some pressure and a downtrend, a slight downtrend at the moment. Current prices for Mexalon are 59.39, so sellers have gone below 60, and then the buyers are at 57.55. Again, really narrow margins on all of this stuff as well, but not very good news for high-sec miners. You're basically at the moment really mining for, well, average prices for the year for Mexalon, but for titanium, 1-year low prices, and then for pyrite, pretty much the low end of the range as well. So not the best time to be investing in high-sec minerals, in my opinion. If I were to be doing high-sec mining at the moment, which I'm not, I would be stockpiling for better times. That is one way to go. The other way to go is to decide that this might just be the right time to risk something, to put up, to create a cheap and faster ship, and maybe go hunt for some Isogen, Sonoxium, or something else in high-sec, maybe even in null-sec, excuse me, maybe even in Podven, to try and get a little bit more of a return for your time spent, which, well, for miners is not always an easy proposition. But let's move on to those low-sec minerals. Here is Isogen. plateauing and constantly bouncing up against the 400 disk. I do think that there will be a little bit of sell pressure there. 404 for the sellers, 385 for the buyers, and you can see here 40 million units coming in, 16 million units coming in. Well, I mentioned this once we got these pullbacks here in April as well, that the dynamic for the isogen market, while the reality is still that we are working away more and more of these old stocks, and we are getting closer and closer to a high price that depends on active supply demand. We're still not there, and some of those round numbers, I think, well, I can sell above 400 if you bought a year ago, 2 years ago, 3 years ago. This is obviously, or you stockpiled, this is obviously an insanely good opportunity, and so this is going to drive a little bit more supply all of a sudden, which means that we will get corrections in the price from time to time in isogen, and we're not just going straight up, which is what we did basically for the first 9 months here of this chart. Now, this dynamic is now completely different. From that perspective, there are still stocks out there, but they are now basically being sold for those really good prices, get a little bit of a pullback, but then the next leg up is just there waiting, because active supply against active demand is, in my opinion, still not a 400 disk price. And then we've got the Noxium chart that's actually under pressure as well, although at the tail end we've started to pull up again. Here we actually have a day with the average prices of just below 1000 ISK. Currently 1060 for the sellers, 1053 for the buyers, again as narrow a margin as you can get here, but definitely Noxium trading at a pretty low end of the range. Volumes are actually up quite substantially here for Noxium, which is quite interesting as well, but still 1000 ISK for one piece of Noxium compared to titanium or pyrite. I think it might be worth it to look into a venture and try to get it. Maybe also stock up on some isogen if, like me, you expect that maybe even a 500 price could be at play at some point or something like that. But it's interesting to see that Noxium is not able to go up together with isogen here. So clearly there is a different dynamic in the isogen market compared to the Noxium market, despite the fact that both of these minerals mostly come from low-sec. And to me, this is an indication that Noxium is tied to the active demand and supply, which, well, with the summer slump means not that much demand. And then we get our third party, which is null-sec, of course, and this is completely different. Here is Zydrine exploding again, went to one-year high point at 1250 and then building at an even higher top. 1800 ISK for the sellers, 1400 ISK for the buyers. I'm really not sure why this is. If anyone has an explanation as to why Zydrine is now doing crazy prices, all of a sudden becoming, I think it will be by far the most expensive mineral. But what I do see here is a very important dynamic to keep in mind when it comes to Zydrine, when it comes to Megasite, is it's coming from null-sec. Those are really large, really organized groups. And that means that there is basically like cartel activity, which makes these very sharp, very quick moves to just basically a new range, pin it, that's it, 1800, 2000, whatever it is, and it's there to stay because they are large enough and organized enough that they can dictate the prices for those null-sec minerals. And it does kind of look like someone bought up until 2000 ISK, and then that some relisting or some supplies finally came in, and they are pushing it down from 2000 to 1800. But again, it's that new range. It's being set by the sellers here, which is a very, very different market from, let's say, the high-sec mineral market, where, well, supplies are so plentiful and the parties that supply them are so diverse that it's impossible to fully organize it, to control it the way null-sec can. That's a very big difference, and you can see the power of pricing that null-sec has right here in this massive and, in my opinion, unexpected move in Zydrine. One potential explanation is again the summer slump, in the sense that, well, if there's one region that can suffer quite heavily from low activity, it could definitely be null-sec without a war. And if that starts to mean less mining activity, this is exactly what you could get. For Megasite, we are plateauing, but again, a couple of pretty violent months, going from probably a 600 ISK range to, at the moment, Megasite at a one-year high point 1340 to 1332. So pretty expensive, again, super narrow margin, complete price setting by the sellers of Megasite and Zydrine, though, back as the most expensive one, and both of them have caught up and have now passed Noxium and have become more expensive than that one, which to me is interesting again. We will see, of course, how all of that evolves, but I thought Noxium had a chance to remain the most expensive mineral because it does come from the most dangerous parts of space. But I'm seeing some cartel formation here, some cartel activity, you could say, where a couple of big boys are dominating and are setting these current prices, and it's very difficult to move them from there because competition is super hard to do in Zydrine and in Megasite. On the other hand, it's entirely possible that while the rest of New Eden suffers from lower demand with lower activity, that nullsec really suffers from lower output in general, which could drive these types of prices. Their production goes to their own factories first, and the exports to, let's say, HiSec here in Jeddah are basically at the end of the line, and so they're the ones that suffer first, and then you get these types of price increases. It's super interesting to see, in my opinion, how things work differently in different spaces, in different items and things like that. And then that could be bad news for Morphite, but no, Morphite able to stay pretty damn stable. 42,000 for the sellers, 41,000 for the buyers. My theory on this: why is Zydrine up, why is Megasite up, but then Morphite is not? Well, Morphite is basically still the #1 priority. Its double availability and its full potential is being mined out as constantly as possible in a pretty stable nullsec, and that means that supplies are also pretty stable. On top of that, you get very low Tech 2 price at the moment, so there is no need for nullsec to like start to really hoard stuff or to massively increase Tech 2 production. None of that is needed, which is our which explains our Morphite chart. That's completely different from Zydrine and from Megasite that are up substantially in the last couple of months. So interesting mineral market, and a massive, and in my book a little bit unexpected move here in Zydrine. Then we've got PI that's coming in at 2150. There we go. I don't expect good news here. As I've said, the summer slump in most space probably means lower demand as well, but let's see if I'm right on that. Here is broadcast nodes basically moving sideways, pretty much in the middle of the chart, maybe slightly below average. 1.4 million for the first seller, 1.397, so it could be that that's one of those overflowing. Oh no, that 6 jumps out. That's what's happening here. But yeah, 1.45 million, well below 1.5 million basically for those broadcast nodes. I would put 1.5 as that average, so a little bit below average at the moment, and no signs of really moving anywhere. Then we get construction blocks trying to make its way back, but getting to 8k, and at 9,000 is going to be very difficult to do. 7,900 for the sellers, 7.5 for the buyers. Decent demand still in the numbers here, but those higher prices are a lot harder to achieve. Then we get coolants. Here we get a first decent pullback. We went close to 10k again, but at the moment supply came in 8,500 to 8,200, which is still not a terrible price. But of course, if you look at what we managed to do last winter, 10, 11k was pretty easy to get for coolants. It's a little bit disappointing, of course, but again, summer slump, lower activity, coolants are really easy to produce, so you do have to expect those to suffer a little bit. Enriched uranium is still doing okay, about 10,000 disk, 10.2 for the sellers and 9.7 for the buyers. And the main reason, I think the difference here, it's still tied to fuels, but it's a lot harder to make refined enriched uranium compared to coolants. Coolants is gas planets, you find them everywhere. For enriched uranium, I think you need like a lava planet or plasma planets or something like that. A little bit harder to get, and as a result, you get a little bit more price inelasticity. Yeah, just a really good price, 10k, definitely pretty good. And so if, like me, you try and produce most of your PI for fuel consumption, which means that generally you'll have a consumption rate that does give you more stable price, in my opinion, and these have been the winners over the last half year or so. Integrity response drones is starting to fall off, so the biggest winner for the Siege Green update is now back below 2.5 million, 2.5 for the sellers and 2.4 for the buyers. Still very expensive, of course. This is the one just new reality that the Siege Green update has brought us. Production of larger ships has been made easier, and it looks like integrity response drones have become a bit of a bottleneck. Then we get mechanical parts. That's a little bit of a surprise to me. Back above 10,000 disc. That's not bad at all. So in JIDA, I'm actually gonna put that filter here, 11,000 for the sellers and almost 10,000 disc for the buyers. That means that next week for me, I am going to be selling a little bit more of my mechanical parts. The last couple of months I have been selling PI, but I basically haven't been selling everything that I've been producing. Considering what Coolants is doing, considering the general vibe, in my opinion, we should expect pressure soon. So I'm seeing this as a very nice sell opportunity right now. Miniature electronics falling below 10,000 ISK, just below that for the sellers, 9.7 for the buyers. Nano factories slowly edging back to 1 million. That's definitely not bad. 1 million for the sellers, 900,000 for the buyers. On really low volumes though, so I'm not seeing this as a lot of demand, more like capitulation, that players are not willing to keep dumping their nano factories for 700,000 ISK. Then we've got organic mortar applicators going up all of a sudden, and that's on a little bit more volume, but here the story, we're below 700,000 disc. I think it's more investment than actual demand, pushing the price up to 1 million, going back down to 950,000 pretty quickly, and buyers have not really budged much. They're still at 800,000, creating a large margin. Yeah, I think here a buyer came in up until a certain price point. Recursive computing modules flat at 1 million, so not really, kind of showing that we're in this transition where we don't really know what's going to happen next. Will CCP be able to come out with a couple of announcements still for the summer? Will there be maybe a war or something like that? If not, then yeah, summer slump and a lower demand. Usually we'll expect lower prices there. Robotics is making its way back above 70k, which is not that bad. 74 for the sellers, 69 for the buyers. I would again put this as an opportunity to sell some of these at 70k, because I do expect lower prices over the summer. Rocket fuel still well above 10,000 disc. Look at that, December to January. Again, in my opinion, same story. Coolants has started to slump because it's so easy to produce. It's such a large market. Rocket fuel's a little bit more unique, but you can already, in my opinion, see the volume start to decline. I think the minimum prices here are starting to decline as well. The pressure will be on, and that selling for almost 11k may not last all that long. Self-harmonizing power cores, also a winner of the Siege Green update, starting to play with 2 million. Buyers are still at 2 million, so still pretty expensive, but a bit of pressure is starting to mount here as well. Smart fabs back above 60k, which is still not that great, but I would say trading above average. Sterile conduits continuing the downtrend, heading for 750,000, so 820 for the sellers, 800,000 for the buyers, heading for 750 on the chart. My expectation while seeing what was happening there, maybe a buy could be done as an investment. It does make sense. You're touching a 1-year low point. There is next to no demand, so you're able to pick up maybe a good stash with the buy order, but they're already there at 800,000. So another tactic could be, we'll just buy everything below 900k. For instance, it is a certain number of stuff, it is cheap, relatively cheap, and if you get back above 1 million, you're already looking pretty good. So it's a long-term investment that way, but I can definitely understand it. Supercomputers back below 75k, so losing a little bit of ground, I think to be expected against synthetic oil. 8750, so 9250, all right, and getting to 10k pretty quickly. So there are still some movements in the PI market. No general trends to be spotted here, but yeah, my warning again, I would see these as sell opportunities. Sell in May and go away. Well, it's June, but still sell before the summer, and be ready for potentially a slow one there. Synthetic synapses slowly going up. still at 80k to 77,000, so in-plan demand could still be pretty good at the moment. Maybe trying to eke out a little bit more advantage from the current state of character training might be driving demand up a little bit. Transcranial microcontrollers trying to get back to 70k, not succeeding. Water-cooled CPUs, yeah, those are extremely cheap, making their way back above 5k, but compared to all other refined PI materials, it is pretty inexpensive. And then wetware mainframes, pretty average. Not really sure which way this is going. You can see days with the maximum prices, days the next day minimum prices at 1.5. So this is really just pretty much a sideways market for this one. Yeah, a little bit of hesitation. No one is really sure which way we are going. Let's move on to advanced moon materials, 3010, let's say. Like that. Here I personally am expecting a little bit more of a general trend, which is going to be down, except there is one thing that could switch this around. If the Zydrine explosion is a sign of lower activity in nullsec and is thus a sign of potentially lower mining, moon mining could be suffering as well, and that could form a bottom. It'll still be then dependent on what comes next for the game, but bottom formation may be on the books if that's exactly what's happening for the Zydrine prizes. But let's get started. Here is crystalline carbonite for Galente, and this one is saying nope, we're going below on the disc. 1 year low point right now, 90 for the sellers, 87 for the buyers. And well, we could be forming a bottom here. It would make sense just from the charts perspective, but at the moment that does still mean massive oversupply. So I think that's going to be the next thing to look at here for advanced moon materials. If you're going to try to time a bottom, try to find signs that supplies are diminishing, which could potentially be just it's not economical anymore. It could also again be on that lower activity. But right now for this week, yeah, we're definitely down to 1 year low point, which could be the time to invest. I don't know, buying below 90 ISK does seem pretty good on this chart, but again with that same warning, I would not go all in at this point just yet, because we thought below under disc was that point as well a couple of times here in the last few months, and yeah, people that bought here have probably done a pretty bad deal, at least at this point. So be careful with that, but it's interesting. 1 year low points, and then to see that Zydrine price explosion does potentially make a story for someone that's looking for the investment opportunity. Then we've got Caldari usually, so that is titanium carbide. This one's doing a little bit of bounce from 100. It is generally a little bit more expensive than the others. 111 to 110, so super narrow margin. And I think supplies can squash this pretty quickly. But yeah, the question is, will those supplies materialize? Then this may be already the time to be buying as well. But yeah, it's far less pronounced than crystalline carbonite, of course. Then for Minmatar, plasmonic, non-linear, it's an M right there, Fernite carbide. We are still below 100 disc. We start to move sideways for the last week or so. 97 for the sellers, 95 for the buyers, which again, you can ask yourself that same story. Is this the right time to be buying? And then finally we got tungsten carbide for Amar. That's also dipping back below 100 disc, 100 to 93. So the general question that I would pose myself at this point is buying these advanced materials, these carbide-like materials below 100 disc, is that a good investment? For the short term, absolutely not, right? So be ready to have to double down to get the best price, to get a good average price. But for the long term, yeah, it may be, although again, it will probably depend a little bit on what CCP decides to do. Let's see what the metamaterials are doing then. For Galente, it's photonic metamaterials, kind of staying around the 7.5, so trying to find that new range. 8,000 for the sellers, 7.4 for the buyers. It's still a pretty large margin between sellers and buyers here, and you can see that it's the buyers that are actually getting most of the activity. Then we've got Caldari, which is non-linear metamaterials. It's super hot here, so, which is why I'm having probably some concentration problems, but we'll just keep going. So this one, Again, a little bit of that Caldari premium at 12.6 to 12.1, so pretty narrow margin on this one. And potentially you could see this as another buy opportunity, where the previous one, when we touched 10k, would have been the real buy opportunity. On the 1 year chart, these are of course really bottom prices. Then we've got Minmatar, which is plasmonic metamaterials. That looks far more juicy again. Minimum 1 year low points going below 10,000 discs, sellers at 9.8, buyers at 9.5. So for me, if we're looking to start those investments, plasmonic metamaterials looks pretty interesting. Crystalline carbonate looks pretty interesting. Let's see what terahertz is doing. Also edging back down to that 10k, but I think we're not below that just yet. Sellers at 10.8, buyers at 9.9. One buyer gone, maybe two, and then you're at 9.5. That starts to look pretty interesting as well. But again, that same morning, right? This could still not be the end of it. We could be in really a massive structurally oversupplied market, and this could not be the place where it's going to end up settling at. But again, that one bit of information there, that Zydrine jump is a little bit weird, could really indicate lower activity, lower supply, and thus potentially our bottom. Let's see if there's signs of hesitation in some of the other advanced moon materials. Then fermionic condensates still under pressure, minimum prices touching 40k. On that one, yep, 42 to 39, so super cheap. No signs of a turnaround or a bottom here. Ferrogel bumping up from the 20. Buyers will probably be still at 19.4, so that is still not that great. Fullerite back under pressure. Look at those minimum prices again, heading for 400 disc. 468 to 417. Hypersynaptic fibers back below 5,000 ISK, so another close to 1 year low point, 47 to 46. Nano transistors, 1 year low point right now, and you still have those minimum prices heading for 2k. Super cheap. Phenolic composites, same story, 1 year low point. Pressurized oxidizers, pressure here is mounting as well, pulling away from 10k. We're now at 8.8 for the sellers and 7,000 ISK for the buyers. Clearly here we are still in a massively oversupplied market that is going to go to an even lower price point. Reinforced carbon fiber, not yet the 1 year high point, but the minimum price is, so another gap opened up here, I think. 7,150. 6,000 disc for the buyers for an item that has defended 10k very, very well over the first half year of its lifespan. I think this was introduction time there. And then we get ceramic fibers that are also under pressure, not yet at the bottom. We went below 200 disc, we're at 250 to 230, but still the pressure is clearly still here. But of course, you know, if it happens that supply dries up, things can change in dynamic very, very quickly. That's always, of course, part of taking a gamble in the market. And I would say that people that invest this week in advanced PI, I have a lot more understanding for that one. I can see your thinking. I can see those signs as well that potentially this is the right time to jump in. Compare that to last week or the week before that, we had absolutely no sign that the oversupply was going to end. So yeah, it could be the right time, but again, it could also be too early. Let's see if there's an impact on Tech 2 ships. 37.50. Like that. Basilisk here, bit of a bump, interesting, did not expect that, but we went back above 150, so if we get a low point here, 120 to 150, that's almost tradable. We're already back down to 144 for the sellers, so oversupply is still a reality here. 125 for the buyers, pretty decent margin. I would say wait and see if this keeps going down and we go back to that 130 average, then that's not a sign of increased volatility just yet. Cerberus is just flat below 150, so that's not really tradable. Where are the buyers at? 134. It is definitely cheap, and you can then make yourself do that same thought experiment. If the Zydrine spike is an indication that supply constraints are coming, it's gonna come in advanced MUMATs, and that will translate to problems in Tech 2 ship creation as well. So are we at that bottom? That's the real question, of course. And should we start to invest here? Potentially, then you look at a curse chart that looks pretty damn juicy, going back to that 130 million and below, which is very, very pronounced a 1-year low point. Massive supplies have pushed us to 123 to 119. So just like with those advanced movements, if I look at like a Basilisk and a Cerberus chart, that's like, yeah, no. If I look at a curse chart, yeah, maybe buying 1 or 2 curses at the current price. Let's say that you can grab it for 120. That might just be the right investment to make, again, medium to long term, because short term, don't expect anything too drastic to happen. Then we've got the Damnation making its way back above 300 million, 311 to 272. That's kind of interesting. Then we've got the Deacon that's flattening out at 15 million. I think the small ships are unfortunately, for those that were still looking for those potential trades, I said small ships have that chance, but I think they will also pretty easily land on a range, which again, you gotta ask yourself that same story. Is that 15 million for the Deacon the real bottom? Or not yet? There is absolutely no demand at the moment. 16 million for the sellers. Yeah, it may be. It may be. Then we get the Eagle heading below 150. Not yet a 1-year low point, but I think the Eagle is a little bit more like in the meta as well. So it's got slightly higher demand. Trading volume is pretty terrible though. The EOS, that's excuse me, that's a 1-year low point. That is 264 to 252 million, and that is another one of those ships, if I'm not mistaken, yeah, 125 Mbit. So this is a command ship that if you want to have one of those crazy PvE platforms, but it is take to tank with 5 large drones, which is definitely pretty unique in the battle cruiser space. Well, you're grabbing it for a 250 million or something like that at the moment, when a year ago it was 600 million ISK. So this is really something, another one of those ships where I'm saying if you're looking for that crazy PvE option that was super expensive before, like a command ship, this is definitely the time to grab the hull at least. Then we've got the Ares, minimum price is going below 37.5, yep, 36.3. Again, it's a real lack of demand that is pushing these prices down. But if supplies dry up a little bit, we might see more volatility. Flycatcher definitely at the bottom as well, 41 to 39 million. Buying a Flycatcher for 40 million. Again, it's that long-term thought. Is that the right time to jump in when a year ago it was 70? Then we get the Guardian landing on 130. Minimum prices pulling down though, 127 to 115. That is always that danger. At the moment though, those minimum prices are clearly at the 1-year low point. So again, Guardians at around 115. Probably an okay thing to do. It's 3 times that we've played this. We haven't crashed through that. And again, we could go either way though. Heretic, some of these charts we're going to go through this pretty quickly, and unless we find something special like here, the Hound breaking through 15 million, sellers coming in at 49, buyers at 14.2, so you're absolutely buying Hounds below 15 million. Last year they were 30, that's a more than 50% decline. It's probably going to be the cheapest stealth bomber in the list here. It's a pronounced 1-year low point, right? If you absolutely want to get those Tech 2 investments started, then I would say a chart like this is what you want to start with. But again, I would keep some powder dry as well. Then we get the Ichthyorsa for Triglavian stuff. A little bit of a move up here as we touched 500 million. So I would definitely say for the longer term, right, look for a 500 million jumping point. And then now we're at 555 to 526. And that's really on not a very big move. But for me, Ichthyorsa, 500 million, I think that's where I would say, yeah, you could try to buy one. It is a pretty sizable investment though. Ishtar did a landing on 130, slight pull up, but very, very timid, 134 to 124. So buying an Ishtar for 125 could be good. Chart's not ideal though. Kirin, obviously pressure, but not ideal. Manticore, not yet at a 1-year low point. What are we talking about though? 18 million to 17 million. Yeah, no, Hound basically looks better than in my book. Nemesis staying below 15 million, 14 to 12.5. Yeah, Nemesis definitely a possibility as well. Nighthawk, another pronounced 1-year low point. I'm actually gonna write that down for myself. because I've said it many times, but yeah, I'm gonna buy one of those. Night Hawk. For just to have it and to be able to fly it, to fit it for PvE, to see if we can do some cool stuff with that. But yeah, I'm actually gonna put up an EOS as well. There, EOS. There we go. Not as an investment, but just for personal use. This is, you know, really an opportunity. Again, a year ago, 600 million. Now you're probably buying one. Yeah, we were buying one for 250. Then we've got an Oneros, a little bit of a bounce, but from 100 million. So here I think a slight bit of buying below 100 million as investments is what's been happening. And I think I said last week that that would be something to look into. Then we get a Purifier starting to move up in the spread a little bit as well. So sellers above 20, yeah, 21 million, buyers at 14 million. So that's practically a tradable bounce, but on volumes, it's going to be very difficult, I think, to get that good sell price going, but it is possible. So this to me is that showcase that if you're looking to maybe potentially still get something quickly done trade-wise, look at the smaller ships, and here is an example of that. So the Purifier is actually in a slight sell opportunity right now, but at least it's there, right? Buy for 15, sell for 20. That's definitely not bad percentage-wise. Which again, don't do this with too many ships, 1 or 2 is probably doable. If you do this with 10 Purifiers, you're crashing the market. Then we've got the Rook, slight uptick here, but yeah, again, really timid. Saber, 40 million, and the buyers are down to 36.7. Could be another buy opportunity there. Then we get the Scalpel, pretty flat. Where are those buyers? Below 15. Scimitar landing on 130, Sleipnir 1 year low point and not budging at all, 250 to 237. Another command ship, same story. I think if you want, this one has a PvE option. It's got drones as well. So what's its slot layout? It's a 755. 5 high slots, 2 and 2 launchers as well. It could be interesting. You could have like a really, basically a bit of a crazy, different weapon systems type of a setup here with a Sleipnir, but I'd rather go with the stuff that I know, which is drones and missiles and shields. Then we get the Vagabond, still really low, below 150 as well, and then the Zarmas is actually crashing below 500 million. Buyers are getting close to 400. 450, 450, lose these two, you buy a Zarmast at 400 million, and you definitely have a Triglavian trade in there. Again, do this with like one ship if you're feeling like you have to, because the trade volumes are of course not that great. So Tech 2, definitely interesting, and this to me is really the big question for this EVE talk. What happened with Zydrine? If anyone has an answer for that, I would love to see that in the comments. But if this is a sign that there is a massive or a serious slowdown happening in Nosec activity that could impact supply, then you know, perhaps a bottom could be on the books. Next up, Tech 3 ships at 47.40. There we go, and let's see what's happening here. So we get the Confessor that's actually, to my surprise, normalizing to 50 million pretty quickly. 51 for the sellers, 49 almost for the buyers. New supply, last 48 hours, a full page. So that's definitely quite a bit of supply that came in here all of a sudden, bring us back to 50 million. The Hecate was really high last week, is starting to come back down as well. 56 million to 52 million, still quite expensive, but then it's dominating the last 24 hours with 48 of them being brought in here. That should keep things in check a little bit. And then the Jackdaw is also now heading well below 50 million, 54 to 50 million all of a sudden as well, with supplies in the last 24 hours that we haven't seen in a very long time. Probably 70-80 ships in there as well. So if this I'm expecting a crash then for this Vapel as well, or a pullback. No, actually, all right, this Vapel is still holding decently strong, 51 to 48 million. Not sure what happened here, but clearly something happened right here. So this may be that the gas problem has somehow solved itself. This may be trade volumes are crashing though. So this may be a demand side thing, that there just isn't anyone buying these ships anymore at all across the board all of a sudden, and so that, you know, this supply is just enough to bring those prices down substantially. I'm not really sure, but those volumes are quite worrying, right? Massive supplies, and these are the trade volumes on downward prices. That's not great. I haven't heard anything that would indicate that like the gas problem would be solved all of a sudden. We'll take a look at faction cruisers in a moment to see if there's a sign of anything happening there. But for me, this one, the danger is this could be, again, a demand side issue with the summer slump coming. Who the hell is buying tactical destroyers at the moment? Well, basically no one. So you'll get a little bit of demand, potentially, of course, in nullsec. A Jackdaw fleet makes sense, a Confessor, even a Hecate fleet does make sense. Fable a little bit less. Volumes probably aren't even there, so that could push us back up. But if other demand is just completely gone, then yeah, pressure is back and 50 million is back into play. Completely different from what we saw last week. Definitely a supply, but the only real change that I can see is the complete collapse of volumes. Jackdaw is down. Hecate is still doing somewhat okay, but it was at the highest price of 60 million. And then Confessor, look at those volumes in the last 4 days, absolutely abysmal. Let's see if there's anything happening in the cruiser market. Volumes are definitely down a little bit as well, as prices are coming down here for the minimum as well for Legion. So you're still selling close to 190 probably. Yep. Buyers though 173. So that is starting to open up. Considering the whole demand side problem, I would honestly wait for 1 year low points before jumping in, just like with the Take 2 ships at this point. So the Loki though, sell opportunity, that's impressive, 226 to 207. And look at the catalyst here, the exact reverse of what happened with the destroyers. Massive volume. My read on this, not an investment, but a nullsec purchase. Here's a Loki fleet, we buy a couple hundred of them, pushing the price up. Here is your sell opportunity, and this came right as those minimum prices started to really come down, so the purchase makes absolute sense there as price went below 200 million on average. Clearly a slight oversupply situation, so I think it's that dynamic that will potentially happen with trades. And so if you get inside information on nullsec, you can potentially make a nice killing on those trades. But for those that don't have that information, I again would wait for close to 1 year low points, at least 6 month low points, right? January price range before I jump in. Proteus is actually slightly on the uptrend, 194 to 174. That's pretty really wide margin, and these volumes are still holding. And then we get the Tengu, slight volume decrease, prices down yet again. Are these buyers below 180? Yeah, 176, 190 to 176. So if you're looking for that Take 3 trade, I would say buy a Tengu, try from the buy orders. You can probably grab one for less than 180. I think you're looking pretty good on this chart, and that is definitely like that lowest range for the last half year, close to the full year, in fact, on that one. But very interesting volume decline in those destroyers. Interesting dynamics, I think, in all of these. For Take 3, I think this is really what could happen, what we're seeing right here in the Loki. But I think the triggers will always be very close to 1 year low point. So no Gnostic Alliance is going to step in now and buy another 200 Lokis. They're gonna, for instance, buy, well, 200 or a couple hundred Tengus, for instance. Prices getting close to those minimum prices here for the buyers. You can see that volumes declining, so everything that's not nailed to any too high prices, you could basically go and do like up to 220. You probably have, yeah, there's a 45 right here waiting at 200 million. Grab all of those. I think that's a dynamic that you can take advantage of, but again, if you're not in the know, it's always difficult to do. So have patience and yeah, look for something like this, like what's happening with the Tengu right there. Alright, we still have an extra product to do while I'm slowly melting in my seat. 53.45 for faction cruisers. There we go, and we've got ships, cruisers, not strategic cruisers, but faction cruisers. And let's start with the pirate faction cruisers. Are we seeing something happening here? Ashimu, I think a little bit of slightly different from all the others. I think it's used basically a lot less than these, considered far less powerful because it's like a nuding ship. So 150, basically slightly above average, and some pressure at the tail end. Sellers of this one, yeah, 156, not a lot of supply, but not a lot of demand either. Cinnaball though went down to the 200 million range and does a little bit of a bounce. I would say this one is relatively cheap on this 1 year chart. It's still 233 million though, so you're buying a Tech 2 command chip for this price, which is kind of crazy. But yeah, Cinnaball 230, buyers at 200 million. I know which of the two I would choose. But this one doesn't feel super expensive. We've been in a worse situation, which I think is also that gas problem that's so needed for faction stuff at the moment, at least pirate faction stuff, that they are just super expensive. Then we've got the Ortrus, also went down substantially over the last couple of months and makes its way back to 350. So that's interesting. I'm not exactly sure how that happened, but 350 to 315. But again, super expensive winter with 500 million for an Ortrus, and now 350. Well, again, I'd say an EOS will, or what was the other one? A Nighthawk, yeah, or something like that. Will definitely, in my opinion, outperform the Ortrus, and it's way less in cost for the hull than that one. Phantasm, same story, definitely a decline over the last couple of months. We went down to 250, which is still super expensive, and we're starting to pull back up from that. Stradios only now starting to pull back up, so are those buyers still below 300 million? Yeah, at 280. If you're looking to do a trade on what's happening with the others, buying a Stradios, also you're buying a Stradios below 300 million, best price for the whole year. It's something that I could do, but again, just look at a Tech 2 ship and you're just gonna get potentially something that'll work just as well. You'll have to do some things a little bit differently, of course, but you get that Tech 2 tank for it. Yeah, I would say for the Stradios, I'd do it more as an investment. Buy for less than 300. If the others are any sign, selling at a 350 could be a possibility. Then the Gila, same story, went to a close to 1 year low point at 250, did a bit of a bounce from that, so a little bit of volatility on that, and we're back down as well at the moment, 273 to 256. And then finally we get the Vigilant, same story, last couple of months, pretty steep decline from 450 to 300 million, and we're actually still at a pretty low range, very low volumes on the Vigilant though. And then we get the Navy faction cruisers. Here is the Stormbringer, actually seeing some pressure on this one as well at 200 million, still quite expensive of course, but it is a unique weapon system, buyers just below 200 million. Augurer Navy issue, then I think this could be the faction warfare dynamic. So Amar seems expensive at 70 million, so it's definitely relative. That's a little bit more what I would expect to pay for a faction cruiser compared to a command ship, for instance. And then we've got Caldari, that is at slightly expensive at 70 million, but not the worst just yet. So then we're expecting a cheaper price for the Executor Navy issue. Well, last month in May, we definitely had the lower end of the range right there, going back up slightly. Omen is expensive, just below 70 million. Osprey Navy issue is expensive at 60, but is starting to decline. So I think the Caldari Galente faction warfare, there seems to be a little bit of a shift happening there, with Galente becoming a bit more expensive and Caldari seeing some pressure. On the Amar Minmatar front, we still have inexpensive Sight fleet issue, and probably inexpensive Stabber fleet issue, and then the Vexor Navy issue is starting to go back up from a 1 year low point. This does to me look like a waxing and waning tide to faction warfare that could be tradable, that could be predictable, and if you want to jump in on that, then what you probably want to do is invest in the Minmatar faction cruisers, and then keep an eye on what happens there and try to get Minmatar to lose out. Try to get Amar to push back so that they get more LP, Minmatar gets less, things become more expensive. You bought them for less than 50 million and hopefully you can sell them for, well, if we can turn the tables around completely, close to 70 million. That's definitely a trade opportunity. So very interesting. We did see a little bit of a pullback in prices for pirate faction cruisers. Could be part of the reason why all of a sudden we're seeing this increased supply in the tactical destroyers, but I'm still holding that the price decline is there or a demand side issue, not really a production or an increased supply issue, because, well, even now these pirate faction cruisers are starting to come back up. So they are starting to become a little bit more expensive again. So it's very difficult to say exactly where the market is going. Again, keep an eye out for EVE Online news. And I would say starting to buy towards that Tech 2 and that advanced move material stuff at 1-year low points. It's still a bit of a gamble, but I would say it's slightly more calculated considering what's happening in the mineral market. So that's it for this week, guys. Thank you very much for watching, and as always, I'll see you next time.